central banks are wondering whether they should continue to hold these treasuries, but on the other hand, they're kind of nervous of what would happen if we dump them. Is this going to be seen as an act of war against America? And are they going to suddenly impose massive tariffs on us because we decided to unload our treasuries? We're here in Switzerland now. I don't know if you saw the comment by Trump, but basically he's demanding that Switzerland pay him a huge I'm going to say maybe not pay him, but basically pay a bribe to get the tariffs down. And the comment he's making is Switzerland's got 600 billion of US securities. Well, we're obviously, on the one hand, that could be used as a bribe to get the tariffs down, but I don't think the Swiss are going to do that. But on the other hand, there must be a certain reluctance to carry on holding US securities, including treasuries. But does anybody dare to get rid of them? Would that be seen as an act of war or retaliation?
China, Shanghai made another record high as well. The Shanghai composite is like up 8%. So it doesn't seem like all the tariffs are impacting China that much either.
Well, it's just this wall of money looking for a home. People have got this fiat cash. They want to park it somewhere. You've got all the foreigners all around the world saying, "What can I do with my cash? It's not what it was." So they're moving into equities and pushing the Wall Street higher. Then we've got the government who's running a deficit. So far this year, this financial year, it's been they've spent 1.6 trillion more than they have collected in taxes. So someone's getting that money and they're deploying it obviously into equities in some way, shape or form. And lastly, we've got this massive increase in the money supply, M2, which you spotted the other day, which is up, I think it's up 1 trillion in the current year.
Yeah, and people are going to the stock market, but the smart money, if you want to call it, the central banks, they've been loading up on gold, especially since 2022, over 1,000 tons a year. This year, I think the first half, they bought like 410 tons. So it slowed down a bit, but prior to 2022, the average for the previous decade was only about 400, 500 tons a year. And Clive, I've got some really interesting news here, especially for us who have been telling people that they need to have their own like central bank and accumulate gold, because we're going to continue, as you said, seeing government spending, inflation, deficit spending. But for the first time since 1996, we're kind of back on a de facto gold standard. And people might say, what are you talking about? Well,
governments are expanding their budgets, spending far above tax revenues, issuing more debt, and pumping liquidity into the financial system. This surplus of cash is fueling equity markets as investors look for favorable returns amid low-interest environments. Simultaneously, rising M2 money supply bolsters asset prices across equities, bonds, and commodities. Central banks' monetary easing further amplifies this effect. The result? A dynamic interplay where issued public debt, soaring liquidity, and investor risk appetite all converge to propel markets, especially in regions where growth narratives remain intact.
According to data here, and not Rafi, but Tavi Costa, who I've had on the channel several times, he pointed out yesterday, foreign central banks now officially hold more gold than U.S. Treasuries for the first time since 1996. Let that sink in. If you think this buying streak is ending, just look at what happened in the 1970s. This is likely the beginning of one of the most significant global rebalancings we have experienced in recent history. So there you go. And the data comes from Bloomberg, and I think he must get this from the World Gold Council and stuff like that. And Clive, some people might argue, well, and you said that as well before we started out, it's because the gold price is going up. Yeah, and I agree. And maybe also because government bond prices or treasury prices are going down. But be as it may, you can't really measure treasuries in metric tons, so you got to measure it somehow. And I would argue that if you look here, it started to pick up these holdings also when central banks started buying massively, net buying since 2022. I think this is going to continue, and I'll let you chime in, and then I want to also cover something else about this. But go ahead, Clive. What do you think?
Well, it's certainly a fact that central banks have been net buyers and continue to be net buyers. The one I tend to watch is China, although they weren't actually the biggest net buyer of gold. But what's quite interesting, when I looked at the Chinese numbers, because I've broken them down, I see that month after month, their holdings of treasuries do not rise, but their holdings of gold, in terms of absolute number of ounces, does rise. So they're buying ounces every month. They're not buying treasuries, which are fairly steady. And the percentage exposure they've got in 2 or 3 years to gold has gone from something like 3% to 6% of their reserves. Maybe it's getting on for 7 now. So they basically doubled their exposure to gold in partly because of the price rise, but partly because they've been buying every month. I think that's a trend that's going to continue. There's a reluctance to increase their holdings of treasuries. And I think around the world,
this surge in liquidity isn't just flowing into equities. Since 2022, central banks globally have ramped up gold purchases dramatically, well above previous decade averages. Their cumulative buying has topped 1,000 tons annually, culminating in a historic shift. As of September 2025, central banks hold more gold than U.S. Treasuries for the first time since 1996. In the face of geopolitical risk, inflation doubts, and questioned fiscal stability, gold has reemerged as a resilient, sanctions-proof anchor.
central banks are wondering whether they should continue to hold these treasuries, but on the other hand, they're kind of nervous of what would happen if we dump them. Is this going to be seen as an act of war against America, and are they going to suddenly impose massive tariffs on us because we decided to unload our treasuries? We're here in Switzerland now. I don't know if you saw the comment by Trump, but basically he's demanding that Switzerland pay him a huge. I'm going to say maybe not pay him, but basically pay a bribe to get the tariffs down. And the comment he's making is Switzerland's got 600 billion of US securities. Well, we're obviously, on the one hand, that could be used as a bribe to get the tariffs down, but I don't think the Swiss are going to do that. But on the other hand, there must be a certain reluctance to carry on holding US securities, including treasuries. But does anybody dare to get rid of them? Would that be seen as an act of war or retaliation?
So Trump wants Switzerland to pay the U.S. how much and with what?
This is doing the rounds in Europe. One of the German newspapers has basically got their hands on the phone call between Trump and the Prime Minister of Switzerland, and the gist of it is basically he wants Switzerland to make a monetary gesture towards the United States to get the tariffs down, which is not going to happen, by the way.
No. Clive, there are people, of course, who argue as well that treasuries have been in a bear market, and that's another reason why there's more gold holdings. But I had a look at Clive, and I used ChatGPT because it's quicker. But you still have to ask the right question, of course, and know what you're talking about. I asked them what the average maturity of foreign holdings of U.S. Treasury, central bank foreign holdings of U.S. Treasury was, and they told me it was 6 years. So I took the 5-year note future, which is pretty close in maturity. And this is the price. So hold on, let me get rid of this.
At the close of the summer of 2025, a milestone was reached. Gold overtook U.S. Treasury holdings in central bank portfolios for the first time in nearly 3 decades. Authorities now own approximately 36,300 tons of gold, valued above their Treasury exposure. This profound shift signifies de-dollarization and reflects broad efforts to diversify reserves amid mounting global uncertainty. As Tavi Costa observed, This is likely the beginning of one of the most significant global rebalancings we have experienced in recent history.
So since September 2022, it's basically been flat if you look at it. Yeah, it's not because the price of treasuries have gone down, even though for different countries they might have different maturities and they might hold more, but it would take too long. I could do the Chinese holdings, Japanese holdings, but what I'm trying to say, treasuries have been pretty steady in the last 3 years or so, especially this middle of the curve here, intermediate maturities. But the other thing, Clive, and I think it's quite historic, and I think the era of holding dollars as reserves is quickly waning. I mean, I don't mean to say people won't have some dollars as reserves, but the major reserve currency or asset is going to be gold. And it has always been, Clive, because the last 40, 50 years has been an aberration. But I've got here a chart of the long bond, the T-bond future, which is more a maturity of around 20 to 30 years. And the price of gold in long bonds is near all-time highs. And I think that's going to continue as well.
Why the pivot to gold? Multiple forces are at work. First, gold is immune to political leverage. Unlike dollar-linked assets, it cannot be frozen or weaponized. Second, burgeoning U.S. debt and fiscal unpredictability undermine the appeal of treasuries. Third, diversification is a fundamental strategy for reserve managers. Gold now stands as the second largest reserve asset, overtaking the euro and anchoring nearly 20% of portfolios. Together, these motivations fuel a movement toward monetary sovereignty.
Yep. Well, I think if you're holding a long bond, you're not going to get repaid in anything which will buy you much. And you might get repaid in US dollars, but what will they buy you in 30 years' time? Not much, I reckon.
Yeah, and Clive, the another thing that I wanted to cover today, I'm going to bring it up here. There's a lot of stuff going on, and it's to do with BRICS. And I'm going to share an article here, and it's from Bloomberg. Actually, it's not like a alternative or anything. It says, "Secret Xi letter revived India ties after Trump tariff barrage." So, I mean, if people don't know, China and India have been kind of not on good terms for a very long time because of territorial disputes. They haven't really been that friendly, but they are part of BRICS. And but now, by pushing for this tariff war, Trump is actually uniting old foes, and I think that's going to continue, and it's going to be accelerate this holdings of gold versus dollars even more. So, what's your view on that, Clive?
Well, I think the whole world is wondering what their plan B is, because suddenly investing in U.S. treasuries, investing in the and dealing with the U.S. government is becoming more and more unpredictable, and countries around the world need certainty and they need allies.
We stand at the dawn of a new monetary era. Equities continue to rise on torrents of liquidity, yet central banks are quietly repositioning, favoring bullion over bonds. With gold now outpacing treasuries and central bank reserves, the world is moving beyond the post-Bretton Woods dollar-centric order toward diversified, resilient assets. If history repeats, this trend may mirror the 1970s realignment, but today's stage is defined by technological, geopolitical, and monetary complexity. In this unfolding narrative, gold plays the role of stabilizer and perhaps the cornerstone of a rebalanced global reserve architecture.
And if you can't be sure where you stand from one day to the next, what are you going to do? You're going to team up with anybody who'll be your friend. It's like kids at school. One day they've got their best friend, and suddenly their best friend is behaving like a jerk, and you say, "Well, God, you start looking around for someone else to play with."
Yeah, and Clive, there's also news, I don't know, you've probably seen it, about Vietnam. In Vietnam, when you think of Vietnam, you think of the Vietnam War, but Vietnam has come a long way now. And looking here on Wikipedia, it's got like the 15th, or hold on, GDP. It's got the 23rd biggest economy in the world. And this is what we saw yesterday. They announced that they're going to liberalize the gold market. So Vince Lancy, who I've had on here as well, I'm going to share it with you in a minute, he said, Vietnam ends gold monopoly, opening the market, narrowing the gap. Did Vietnam just join the BRICS? It's very possible. And I think, I don't think there will be, if ever there's going to be a single currency for BRICS, it's doubtful for me. It would take a very long time. But what there will be, Clive, is a neutral monetary asset that all the BRICS countries are going to use, and I think it's going to be gold.